Welcome to Common Employee Changes in the Payroll module on the Uniform Accounting Network. Our agenda for today will include a number of common changes that fiscal officers will encounter with their employee setup. Since this is a video recording, you'll have an opportunity, if you have not done so already, you could pause the recording and print the booklet that I'm displaying the cover page for you right now, the Common Employee Changes. It's about 15 pages long and should be in the same general area that you found this recording on the UN Link website. So it's not essential for the demonstrations that I'll be performing. I've included the booklet as more of an after-class reference. It includes actually more than we're covering today, but I thought it would be handy to throw that information all into one booklet for your reference. Some of the less, I should say they're common, but a little bit less common items we don't cover, and they may be helpful for some. All right, if you're a brand new fiscal officer or relatively new and you've never really made changes to the employee setup, perhaps maybe you got hired and 2-3 months ago or whatever, or appointed, and you took over and were taught how to post wages on payroll week, and it just kind of works. And that's how the payroll module is. It's it can be sort of a set it and forget it type thing, where you enter in the employee's hours when you're in transactions. If I have the software already open here. So often this is the case where you're out adding and posting your wages, and you really never need to visit the maintenance section of the software until perhaps months later, because until there's a change with one of your employees. So that's sort of what the main focus that this class is geared towards. We also have some things that come up less that are helpful, but and common but less frequent occurrences, and we'll go over a few of those. Now, so if you are brand new, I've included a couple pages on screen navigation, and you can see there's the menu path to get there. Just a good way of remembering this is that you can't really make changes other than the employee's hours worked or a few other changes under the transaction screen when you're in the middle of payroll in wages. Most of the changes that you will make will have to occur under payroll maintenance. So just remember that you maintain your employee setup, so that's in employees, under payroll maintenance. That's where you maintain their settings whenever you have a change. So again, this can get a little bit complicated sometimes at looking at the edit screens for your employees. And so I've included the screen navigation guide. We've included little icons throughout to help you navigate through the various forms and subforms. And then in the rest of the booklet we go over the various demonstrations, some of which I'll cover in class today, and some step-by-step instructions. Okay, so I'm going to close that and show you our agenda for this session. I will roughly follow this order and cover a few side topics as well. Our agenda is how to charge. Our first thing we'll cover is how to charge an employee's wages to more than one fund or account code. Some of you may have employees with 1 or 2 account codes that are charged on their earning, and now some things have changed in their position, and you may be able to charge other account codes for when you pay their wages. How do you implement that? show you how. How to add a brand new withholding. For the example we use is an employee moves to their home address to a different school district and has to pay a different school district tax, maybe one that your government or library district has never had an employee pay before. So how do you add that from scratch in the system? So we'll show you that and how to add some other withholdings. Also, W-4 changes, how to implement those in the software when an employee hands you a W-4 and maybe wants to add an extra amount to take out of for their federal taxes. How to update withholding rates or amounts for more than one employee at a time, maybe even 50 employees at a time, depending on the circumstance. That can be done. So if you've been doing that one by one, depending on the type of withholding, what you're doing, you may be able to use a shortcut tool we have called a withholding editor to update those all at once. Be a big time saver for some of you. How to give an employee an hourly rate increase. That's a very common one. And then how to, or hourly rate change. How to, that could be a salary rate change as well. We'll cover that. How to record a retirement leave payout that OPRS has deemed non-pensionable. There are some that OPRS may deem as pensionable, but for OPRS or Ohio Police and Fire, if they say, hey, this payout for leave, maybe at retirement, is not, you should not withhold an additional retirement amount for that. How is that? Should that be properly recorded? We'll leave that for last, since for many you may not have leave benefits for some of your employees who are watching this. All right, so that's our basic agenda. Now we'll turn back to the software. All right, so starting off, we're under, again, payroll, maintenance, and then employees. That's how we got here. Here's our fake list of fake employees for Buckeye Township, Franklin County, in our fake township. And the first one I want to work with is a very simple generic employee setup. That's John Smith. He's got probably the most basic setup of all, you'll see. And so we're dealing with existing employees right now, not adding new employees. That would be another video. So we'll select our John Smith, our employee ID. And notice this is just a preview list for those of you new. You can't make, this shows you various settings, very limited list of settings here, but just to give you a quick preview, you can't make any changes on this screen itself. You have to edit that employee's detailed information. So we click on the edit button. We have two options, guided or advanced. UN support, as of this time, 99% of the time encourage you to choose advanced. Guided is well-intentioned, but in most cases you're better off choosing advanced. You can navigate through the software best by choosing that option. So we'll select advanced. And this edit employee screen, you'll note it has a little icon for indicating you're in the initial detail screen. And it has his name and various tab pages. Notice the tab pages going across the tab of the page. If I click on those, it changes the information I have available. The information page, of course, at first is the just shows your address information, social security number, etc., W-4 information. The other additional information page is an optional place for additional information, custom information. And then we get to really the heart of the setup, which is the earning. And this employee has a very simple setup. He has one hourly wage earning, he gets paid by, we can see from the preview list, again, there's more detail we can dig into. From the preview list, we can see he's a biweekly employee, he's a cemetery worker, his position, his pay rate, one account code that's being charged out of the cemetery fund, and that's his active earning. Okay. He doesn't qualify for any overtime benefits or non-cash benefits or leave benefits. But he does have withholdings. Every employee will have withholdings. At the very minimum, they're going to have federal and state, and very few will not have Medicare. And then most will have a retirement contribution of one sort or another. So in this case, it's going to be OPER. So it's probably unrealistic. You probably have some local taxes and others at least in our township, because most of the other ones do. But I just wanted to start from the very ground up right now to start off in our example. You'll notice for the employer portion, the share for Medicare and OPERS, it also charges just one account code, the cemetery fund again. Now, I'm going to click back on the earning. I want to point out that we have another video, it was another webinar recording. It was titled Restructuring Employee Settings. 2.5 hour recording that goes over in detail a lot of the decisions you would want to consider when just basically setting up an employee's earnings and their withholdings. And so I'm starting off slow in this recording, but I'm going to pick up the pace a bit. We're not going to cover as much regarding just the decisions and all the various aspects of each earning and withholding. That is covered in quite a bit of detail under, again, the title of it is Restructuring or Reorganizing Employee Settings. And also you could watch the videos for brand new payroll users. All right, so back to our topic here with this employee. He's got one earning, and our first task, common employee change, that we're going to go over is we would like at our township to sometimes charge John's wages to the general fund. Or you could, fill in the blank of what fund that you would like to switch to with your employees. So this is just an example. What we're going to say is that John works. He's a cemetery worker, but on maybe he's paid bi-weekly, maybe 1 or 2 out of his 26 pay periods. He does some work in the township hall and helps out during a busy time there or some other department, and we can, according to our policies, charge the general fund for that. So that's just an example. You're going to have your own examples and your own policies and various account breaks. So how do we take care of that? We're going to do that by editing the earning. So we click on the earning and then click the edit button, and it opens up this separate window, edit employee earning. Notice that the icon is different. It's there so you can kind of quickly see that you're in a sub-form of the employee form. This can, at first when you're getting used to this, be a little bit off-putting because you've got all these tab pages. Some of them are similar. For instance, you've got the withholding tab, and here on this separate subform you also have a withholding tab. And the point of all these tabs is, in part, is to show you the relationships between the different items. Now, like I said, the core of an employee setup is the earning, and so in the earning it's going to show you your other components if the employee has them, like leave, non-cash, overtimes, and if they are associated or assigned to that earning. An employee can have multiple earnings, and as we discussed in the restructuring class, hopefully you can streamline your settings so that employees have as few earnings as possible, and then you have less to maintain in the software. And that's what we're doing here. Let me close this for a second and reemphasize here that a mistake in this particular situation, it would be a mistake if we decided, well, I want to add another account code, maybe I should click on this add button. What that does is forces you to add an entire separate earning. Notice that you have to fill in all the position and earning information, fill in the withholdings again, for instance, and make those changes, the account codes. That would not be that could be done. It's not the ideal way to do it. It, in the long run, will increase the time it takes for you to maintain your employee settings. Whenever there's another change of any type, you're going to have to maintain it, update it, not just in one place, but in several places just for that one employee, or at least two places for that employee. So it doubles your work. So don't double your work unless you have to. Sometimes there are, if this employee worked at a different position and got paid $11 an hour instead of $9, we would need to add another earning. So I'll leave it at that for now. Again, the other video covers that in greater detail. But for certain things, like if the only change for this employee is to add an account code to be charged, there's no reason to complicate your employee setup by doing anything more but adding another account code to his settings, to his earning. So we're going to check mark that and click on Edit. And it'll bring up our Edit Employee Earning form. And now we're going to go to the Accounts tab. In the Accounts tab, I'll go to the Data Entry line, highlighted below here. Gives me an arrow. I click on that, and I can pick from a list all of my direct charge account codes that I have set up in my budget. And so I'll pick one of them here. And then what I did was I'll go ahead and delete this. That's what that little X is for. I'll do that again for you. Now watch, I can even start typing in the number. It'll narrow it down to the general fund. And then I'll pick my account code. What I did before was click on this Insert Row arrow. It pulls it up to the list of account codes that's telling the software these might be charged for this hourly wage when I pay it. Now I'm just going to save this and let's see what happens. Oh, there's that ominous flashing red dot that some of you may have seen if you've experimented with this. And sometimes people call and say, hey, I've got this red dot, I don't know what's going on here, but it's not saving my information. Well, it actually, when I hover the mouse over, it gives me a message. It says only one appropriation account can be selected with the no split. Well, what's that? The no split method is this account split method. When you have more than one account code, you have to choose one of these other three methods, telling the software how to handle that. Now, again, the other video goes over those in detail. I'll point you out to this little question mark. Whenever you see the blue question marks, it's extra information that can help you understand that particular area. So don't be afraid to click on the blue question marks. When I do that, it gives me a written explanation of the 4 different types of splits. And so I can, that's something you can read over at your leisure. What I'm going to do right now is simply choose the manual split. That's the most basic one and makes sense quite often to be used for hourly employees. It's where you would type in you can list the account codes in the maintenance area that you could possibly use for this employee's wages, but it won't pull in any hours worked into your actual wage. It'll pull those account codes and list 0 hours until you enter the hours each pay period. which is pretty typical of most hourly employees. Their hours vary, and where they are charged may vary. So that's what we've done here with the manual split. I'll click on Save, and now it gives me a confirmation, saved cemetery worker, hourly wages. So that worked. I can close the screen and see the 2 account codes on my list. Now, even though I did that, let's take a look at our withholdings. Remember, John only has a small group of withholdings. And let's take a note now. This lists Medicare, and we saw in the other screen that Medicare was attached to that earning. So Medicare will be deducted. The employee share will be deducted, but the employer share will still, the only option that we have is that it will be charged to the cemetery fund currently, unless we make a change to the setting here. Or for the OPRs, the same idea. I'll start with OPRs actually, and we'll edit the OPRs withholding. So there there's the regular plan for OPRs, where our employee share distribution for this employee. He pays into 10% in the regular plan. There's a couple of other plans, fringe benefits, salary reduction. But this is, and there's more information, I think here, maybe not there, yes. This is, I was kind of jumping ahead of myself. But you want to make sure that, I guess, in this area, you want to make sure that you have the correct plan for the agency. For instance, the regular plan is pretty standard for OPRs, but if you have a special fringe benefit or salary reduction plan, or you think you might, don't just change that on your own. If you think you might qualify for one of those plans, contact OPRs or whatever the agency is, if it's OPNF or Social Security, and check to see if you're on a different plan before you make any changes here. So our setting is the standard one, the regular plan. And then if you look at our earnings, we can see that this is attached to our hourly wages, which is going to be, can be charged to multiple accounts. The employer share appropriation accounts tab page lists the no split method, and it's to the cemetery fund. Now I've got a few options here, and those are described in the question mark again, so we could read through that. But I will just focus right now on the object split method. If I choose object, notice that my count list disappears here, and I've got to choose an object code. That's the component, the third component of the appropriation account, fund program object, required component, that is. And so I've got my object codes listed here for townships. I'm going to pick OPRs 211, and when I do that, it fills in these 2 account codes on my screen, one for the general fund and one for cemetery. And I'll come back to my edit employee screen here and show you the earnings again. Remember, I added the general fund, and so now when I choose object, it looks at the fund and the program code that I've selected for my earnings and says, well, when you pay that 14% for OPR's G regular matching portion, the employee share, follow the distribution of the hours you're paying for the earnings and distribute it proportionally to the same fund and program codes, and with the, of course, the 211 OPR's object code. So distribute proportionally by fund and program, and that is exactly what it'll do. I'll demonstrate how that looks in wages in a few moments. Before we do that, we would need to finish the screen here. The next tab is appropriation accounts, a fringe benefit plan. Again, that's a special plan, in this case that you would have with the agency that you would already have set up. We don't, at our township, this employee does not have a fringe benefit with OPRs. Notice the entire 10% is taken out of is set to the regular plan. So it really doesn't matter what account code I have here because it's not going to be used. But technically speaking, the UN software will not allow you to save this screen without having at least one account code. So UEN, for consistency, even for those who don't have the fringe benefit plan, we encourage you to set up the fringe benefit tab in the exact same way that you set up the employer share. It makes it easier for you to see on various screens and reports. And so that's what we'll do here. Pick OPERS. And now we can save our changes. And close. And now we can see, if I go back to the withholding tab, that's listed here under employer fringe a little bit differently. It's going to show the 211 object code. That's a visual cue for you to look at a glance and see, okay, I've got OPERS government set, the employer share set to object split. I'll real quickly do Medicare, which operates under the same principle. So we'll change that to the Medicare object split. And save it, and now you can see that the both of them are set to object split from just this screen. Alright, remember we don't have any special benefits for this employee, so now we're just going to close this form, and I'll quickly take a look at wages for John Smith. When I add a wage into batch, I get my usual messages, and yes, I should check make sure I select my frequencies. John's bi-weekly, so I'll advance the date on my frequency, and then I'll find his name on our list. We're just going to add him. And close. Just want to show you what this looks like in the edit screen. So if you're one of those townships or villages that only doesn't have any split method set up, which is possible, you're used to looking at this. Then you're used to looking at this account code and just seeing an account code under the appropriation account column. Once you add a split method for the earning or any other type of component similar to that, like an overtime, it's going to give you this little plus sign. Now this plus sign won't do anything. I'm clicking on it, doesn't do anything. It's just we're trying to tell you, hey, you've got the manual split method. Click on the plus sign in the left-hand corner here to expand to a greater level of detail, and it's going to show you your accounts listed. So remember our scenario that John is he's a part-time worker, and he gets paid for cemetery work most of the year. So in a typical pay period, we're just going to say, well, he worked 22 hours. It's charged to cemetery fund. And we can just leave this other account code blank. So we would not have been able to add, let's say we want to add the Parks and Recreation, or the Parks Fund, and account code. We can't add it here. We'd have to go to maintenance to add that account code if we needed to charge it for John. But once it's added under the maintenance section, it doesn't necessarily, it's not going to require you to distribute that any payment for those wages to that the account code listed. So you only use what's needed for that pay period. So we'll leave that at 0. And another thing I want to show you on this screen, I want to point out that you do not need to view this on in the normal course of things. I want you to understand how it's working. And so I'm going to click on the withholdings tab. Like I said, it would be very rare that you have to come here and take a look at this when you're doing wages. And it's the same principle. I can expand that by clicking the plus sign. There's this hourly wages. I need to expand that again. And here it shows me the two account codes, the object split method, and it's distributed to the 14% for OPERS is distributed fully to the 211 under the cemetery fund. Okay, so that it follows our distribution in the earning. Now let's say it's that pay period, that 1 or 2 pay periods a year, where we will pay John out of the general fund as well. And I'll just put in 10 hours there. So $90. The 14% of that will be charged to the general fund. So it automatically follows. Or just to mix it up here, whoops, there's our hours. And if I put in half and half there, you can see that it's going to be follow and be split both 2 ways. That 14% will be split in 2 in that case. So the object split is really a great option, and we encourage you to use that. Alright, so I'm not going to make any changes there. I'll go ahead and delete that from batch. Need to show you that for our demonstration. And we'll reset our menu back to the maintenance menu. And move on to another example. Let's see if I want to stick with my agenda here. I want account code. I want brand new withholding. We could do that. Yes, we'll do that. So our next example is adding a brand new withholding. This is a very common phone call at UAN. Maybe something that some of you do very infrequently. And our example is going to be a new school tax, and I don't want you to tune out if you don't have anyone who pays school taxes, because you're going to have some application here for any other type of withholding that you have to add from scratch. So this is, we'll give an example of how to add an existing, maybe you've got an employee that, in our example we're going to go over is has deferred other employees had deferred compensation, but not all of them. And then in the course of time, other employees sign up for deferred comp. So that's an existing withholding that you could add to employee. This next example is an example of a withholding that you do not have set up in your system at all. What steps would you take to add that withholding to the UAN system and to and then in general, and then to the specific employee? So first I want to take a quick look at our employee example, and this is in your booklet. Let me find the page number for you. On page 7 and 8, looks like. And our example is Mr. Carl Crank. He's got more complicated setup than John. So I'll edit that. So Mr. Crank here, notice that his withholdings, he's got the West School income tax as part of his group of withholdings. But he has recently moved. He just got paid, and his last pay period, we've paid his last check where he's at his previous residence, which was, of course, 100 West Cider. And so we're going to update his address information first, because he's got a new address. Say North Side Street. Moved to the northern end of Buckeye Village, or Buckeye Township. And so I can save that information. This is where you would save his address information. Now his old withholding, he no longer has to pay that West School income tax, we'll say, but you want to make sure that you don't get rid of this West School income tax until after you've made the final paid him his final paycheck in which it should be withheld. Once you've done that, you want to come back here, and you won't be able to, in most cases, be able to remove that withholding. And the reason for that is most likely, and right now we're in end of August in this demonstration, and we've already withheld this West school income tax from his checks all year. So the software is not going to allow you to remove that from UAN or from this employee completely. So we get an error message if we clicked on the remove button. But we can deactivate, render it inactive, this withholding, and what that will do is hide the withholding from our withholding list. It'll hide it when we do wages, and it won't be withheld from future wages, but it'll still be on reports for past wages in this fiscal year. So essentially it's ineffective. So it won't have effect on our wages once we deactivate. So I'll select deactivate. Like I said, it'll still show up on reports for past wages. And let's say I accidentally clicked the wrong button. Maybe I accidentally deactivated dental insurance as well when I didn't need to. I can always change the status menu from active to inactive, and I could reactivate or click the activate button to make it active again. Alright, so that's getting rid of the old withholding that's no longer relevant for this employee. However, now he's moved to this new location, and that has a school district income tax as well. So let's see what happens when I try to add that to my withholding list for Carl. I click on the Add button, which is right above my withholding, in my withholding tab, above my withholding list. It brings up the subform, Add Employee Withholding. It's got a different icon. And a drop-down menu for me to pick from existing withholdings. Now I've got my list of withholdings. Some of these withholdings are preset withholdings. Medicare, Social Security, OPRs, meaning UAN provided these withholdings and provided the payees that go with them when you got the UAN system. Several of these, though, are custom withholdings. If I look down through this list, I cannot find a North school tax. I can find East and West, because that's what I have current employees that pay into those. I have those withheld and pay into that. But I don't have a North income tax, school income tax. Well, UAN does not have every school and every local tax in the state of Ohio included in the software. That's something that you would add and create your own custom list based on what's applicable to you. Same thing for all these other miscellaneous withholdings, the health care, dental, deferred comp, etc. That's something customized by you. So I can't add this yet. I've got a few other steps that I may need to take before I can add a brand new withholding. So I'm going to close out of this employee maintenance area, and I'll briefly show you under payroll maintenance the global withholdings, or the master list of withholdings for all of your employees that you could, including our preset withholdings and your customized ones, are listed here under payroll maintenance withholdings. And you can see we don't have a North income tax. However, notice that each of these have a payee. I'll just highlight East and West. And those East school tax and West school tax are assigned to a payee. Well, you withhold from your employee, you deduct it from your employee's check, a certain amount, and then you pay a vendor, an agency, and that's going to be the name. In this case, it's the Ohio, just a moment, please. Okay, sorry about that. We had a little interruption, but I'll continue. So I was saying that you deduct from your employees the withholdings you have to consider that you also have to pay the payee what you withheld. So in our case, we'll call our payee as the Ohio School District income tax. Both of these school taxes are paid to this agency, and in fact our north one is also going to be paid to our agency, that vendor or payee. So in our case, we're lucky that's already set up. You may have, for instance, if you have a new health insurance provider, you may have to add a new payee or vendor. And for those of you who are unaware of where to add that, you would go to out of payroll and go to general maintenance. I'll close withholding. So general maintenance and then vendors payees. The reason you go out of payroll is because your vendors and payees can apply to the accounting module and or the payroll module. Now this is going to show us everyone, our electric company and plumber, etc. So if we want to narrow down our list to those just available in payroll, we would select this type filter at the top and choose payroll withholdings, and it will narrow down our list to just those who are withholding payees that are available for our payroll withholdings. And we can see that Ohio School District income tax. Okay, so again, in our case, the Ohio School District income tax is already listed for the payee, so we don't need to add that, but in different situations, you may not, it may be the first time you're paying this in payee for a particular custom withholding, and so you would have to add the vendor. And this is where you would click on the add button above the list, put in your vendor name here, and that's the two required fields, the vendor name and the available in checkbox. So you have to select at least one thing here, and for payroll with those vendors that should be available in payroll withholdings, you have to check mark payroll withholdings. If you don't do that, if you just check accounting with accounting purchases and payments or something, this vendor will not show up and be available in to pick from your pick list when we show you in a few moments how to add that vendor and link it to the payee. So only those that are marked that way will do so. Now notice when I select payroll withholdings from my available in list that it makes the account code number 1 field required, and that's required for all those vendors that are used for payroll withholdings. You want to put in an account code, a customer number that payee has for you. So if this were for like insurance or deferred comp, you would put in their customer number for you, or in this case we have for our school district income tax agency, we put in their account number. This is for all of them. For federal taxes, you put in your federal tax ID number. Okay, so that's how you set up the vendor payee, or confirm that you have it set up already. And then you go back to payroll maintenance, and you look at again your master list of withholdings. And again, we have the east and the west. We need to add the north. So I'll go ahead and click on the add button under withholdings. Try to be consistent here, so we'll call this the North School Income Tax. All right. And for each withholding, you have to pick a process group. Now, this list of 5 process groups are not from UEN. We didn't make up these descriptions. This is from the IRS. I believe it's the Circular E document. And if you want, you can consult with the IRS to get more information on this. Most of them are pretty straightforward. For us, it's going to be the school tax. Pretty straightforward for a school tax. Local taxes, Deferred withholdings is always going to apply to deferred compensation. And then the cafeteria plans are only going to apply to your types of insurance that qualify as cafe plans. They get a huge tax advantage for that, so be very careful that you find out if you're going to add for an insurance withholding. Make sure that you've got it right. If it's not a cafe plan, then it should be a miscellaneous withholding. That way it doesn't get all the tax benefits when that money is withheld. The employee doesn't get all the tax benefits that comes with a cafe plan. You don't want to get that wrong. I can't caution you enough. I know it's a side note, but if you are ever add any type of insurance to your in UAN, make sure that you get that setting correctly. You can't change that afterwards. You'd have to delete or deactivate and add it again. So make sure you check with the IRS to make sure you have the correct code here. In this case, pretty obvious, it's a school tax. So select that, and then we need to link that with our payee. I think, let's see, this tells you, hey, if the payee doesn't show up on this list, then you need to make it, make it and add it to your list under General Maintenance Vendor Payees. Well, because we have Ohio School District income tax available in payroll withholdings at the vendor level, then it will show up in this drop-down list. We can select it. This particular one, for this particular vendor, we don't have a location, in other words, an address, because we pay them electronically online, or at least our township does, and so that's not necessarily required since it's just going to print an electronic voucher for us. You need to put in a school district number for the W-2 information, and so I'm making up a number there. And then you need to indicate whether it's a state type income tax base or an earned income only tax base. The default, this always will default to the most common one, the state income tax wage base. If you're unsure whether the district you're adding is the standard one, it could be the earned income. It's very important that you get that right. Check with the Ohio Department of Taxation on that to find out if it's one of these special earned income only tax base. That will impact whether the percentage rate is calculated as either a straight percentage of what, or if it's reduced by personal exemptions. So I'm going to put in our rate under employee share. We'll say this is, I'll just say it, they've got a rate of 1.50. And then I'll save it. So now I've saved it to our master withholding list here. Not applied to any employee, but it's available if we need it for any employees, which we do. So I'll close the master withholding list and go to payroll maintenance employees. And now we can return back to Carl Crank here and edit his employee setup. We'll go to the withholding tab and now add, and North School income tax is now listed. Pick that from my list, it will pull in the rate. And for school taxes, the software will automatically, if I click on this earnings tab, it automatically attaches it, assigns it, links it to all of your earnings. So I don't have a choice in that. Just like with federal and state, will automatically be deducted. If I add it to the employees list of withholdings, then it's going to automatically be deducted. So I should have misstated it. State and federal is automatically deducted from every employee. But if you add school taxes like that, when you add it to a particular employee, it's going to automatically link it to all of their earnings. So I will save that, and then it resets the screen, tells me it's saved the North School income tax, and close. And so then when I go pay his earning, it will now deduct that it'll deduct the tax from his earnings. One other side note that you can look at on your own, if you go into the edit and withholding screen, so under withholdings, and edit any one of your withholdings, this little question mark can be helpful in understanding how taxes are calculated. So I'm going to click on this question mark right here, and it gives you an explanation of the tax wage base. And in this particular example, it's important on how school taxes are calculated. You may not, in some cases, you may not have a straight in this example, 1.5% deducted from your employees' wages, depending on how your employees are set up and which wage base is selected for that type of school tax. And an explanation is given for all the other tax and retirement withholdings as well, so you can take a look at that. All right, so that's adding a brand new withholding. I'm going to take a quick look at our agenda here. So we've added a brand new withholding. There's an example of a school district. I'm going to show you an example of an existing withholding that other employees have. We have it on our master list. So here we're with Carl Crank, and if I click on the Add button, I'm going to say that Carl filled out the forms, got with the deferred compensation, and he would like an extra $10 withheld from his check for deferred comp. So I click on the Add button, and it opens that Add Withholding screen, and I'm going to select Deferred Compensation, which should be on my list here down at the bottom, ordered by processing group. And I have it set up to default to 0 because deferred comp can vary from employee to employee. So I have some employees getting $25, some $55 taken out of their check on their deferred compensation plans. So in the master list of withholdings, I set it up to an amount of 0, and then I can put in the amount that the employee has designated. And in this case, with Carl, it's $10 per check. Now, notice that I haven't selected, I've got my earnings and I've got my hourly wages here. A very, very common error that newer fiscal officers make is this. All right, I put in the $10, I save, and I get this message. It says, important, read carefully. You ever see that? Make sure you read the rest of the message. And if you don't understand it, call UN support. We'll give you, read it to us, write it down if you have to, and call us, and we'll be able to guide you on what this is referring to. It says, you did not attach this withholding to any active earnings. Therefore, it will not be applied to the employee's wages. So we're trying to make a point here. This is important. Edit this withholding and attach the applicable earnings tab to be sure to save the withholding if any changes are necessary. Well, again, I understand this is all new to some of you, and that can be confusing when you're unfamiliar with all of these different screens. So a common mistake is just to click OK, and you look and say, oh, look, it says down here, saved deferred compensation. Huh, well, maybe, I don't know why I got that message, but all right. So you close the screen, and you see, oh, deferred compensation. It's on my employees withholding list. I guess that means it'll be deducted when I pay Carl his next wage. Bad assumption. Just because you've added a withholding to Carl's withholding list does not mean it's going to automatically be deducted from the wages. These are all the withholdings that could possibly be deducted from a particular earning. Now, Carl Carl's earnings have been streamlined so that he only has one earning, and that's great. That if you watch the video on restructuring, that's what we try to accomplish when possible to minimize the employee setup. But it's possible that you can have legitimate reasons to have several earnings, maybe even several hourly wage earnings in rarer circumstances. And because of that, UAN cannot program this to automatically, except for like federal and state because it apply to everything. But for most of its holdings, you might have an employee that gets paid monthly, a check monthly, and then you get for various reasons at a different pay rate, he gets paid biweekly. And if you have a withholding that you only want taken out once a month or biweekly, and you pay him separate checks for his monthly check, you don't want that attached to everything. So UAN cannot program that. You have to tell the program when should I deduct deferred compensation and from which earnings. So you would discover, unfortunately, or hopefully you would discover that when you printed that wage, that deferred comp would not be deducted just by having it listed here. Hopefully you catch it on his pay stub before you hand it to him, and you don't have to make any further corrections down the road. But we've got this call quite a bit. Hey, it's not. I looked at my records, the pay stub. It's not deferred comps not being deducted. What's going on? Well, this is where we take folks. We want to edit that withholding, and I always have you look at the earnings tab. And often we discover this is the problem. This is really one of the most common phone calls UAN support gets. The withholding needs to be attached, linked to the earning, and this tells the software, when I put a check mark next to it, this deferred compensation will be deducted whenever I pay the hourly wage earning. So I'll save that and close. And I realize that might have been a little bit confusing because it's the same as his pay rate. So let me change it. I'll just say his deferred comp is $15 an hour just to make it different. And so whenever he's paid, he will have that $10 deducted or $15 deducted from his check. All right, so that's adding a custom withholding. See if I want to go in the same order as I have listed here. All right, adding a W-4 changes also can involve withholdings. Now, some employees, I think I'm going to switch my employee example back to our buddy here, John Smith. Remember, John is part-time, and so he's marked part-time here. And John is part-time. He works two different jobs, one with the township and works at a grocery store in addition to that part-time. So he's holding these two different jobs, and he finds that with his W-2s in April, he's always having a big tax bill because he doesn't have hardly anything taken out of his paychecks because each position at each company calculates his wages, and he's not making enough to really have much withheld at either job. So he's comes to you and says, hey, can you take out some more federal taxes so they don't have to pay so much in April every year? You can do that, but make sure you have John fill out a W-4 because the information that you input into the software has to match the latest W-4 on file from your employee. And so one of the things that you'll do is come to this tax exemption section under Edit Employee, the Information tab. And here we've got whether it's an IT-40 for state taxes or federal. You want to have your employee sign that and fill it out if there are any changes, and adjust it if they increasing exemptions or there's a change in the marital status, or whatever the case may be. Notice these nice little links. Federal here, if I click on that, it brings up, well, the wheels are cranking, hopefully. It brings up the W-4 form on the IRS website. So keep an eye out for little extras in the software there. And so you could print this out and have John fill it out. What if John, in addition to this, he says, I want, now line 6 here, I want an extra $25 taken out on my check. I think I got the right line, yeah. So he specifies that. Okay. Well, a common mistake that new fiscal officers will make is that instead of, they say, okay, you want an extra $25 taken out from your check, you know, they put the W-4 on file, and then when they go to post his wages, they edit the withholdings and add, maybe it calculates $5 in tax, and they add that and bump it up to $30. And they end up doing that every single pay period, adding that $25. That is not the way to handle it. The best way to handle it, one, it adds a lot of work to your schedule, and in some reports and can cause confusion. The best way to handle it is to go to the maintenance area, and UAN has 2 preset withholdings for state and federal. If they fill out the IT-4 or the W-4, to add that extra amount, if they indicate on one of those forms, you would come here, click on the Add button, and in your withholding list, it'll be available for everyone, you've got the supplemental federal or supplemental state. Those are preset by UAN. So I'll select that, and then I've got to change it to an amount and type in the amount that John has on his W-4. So here I've got $25. Now again, this will not be deducted unless I attach it to an earning. So I'm going to check mark that earning, click on Save, and then Close. And now this will be taken out of his check whenever he gets paid. Okay, so that's W-4 changes. Next on our agenda, how to update withholding rates or amounts for more than one employee at a time. All right, so we've been looking at withholdings, and we saw, you know, we added a new withholding. This question comes up, you know, not frequently, but whenever you have major changes, some, you know, townships, villages have major changes to, like, their health insurance policy or other insurance policies that get renegotiated, you know, sometimes annually, or you change policies, and their amount, you know, it affects many employees at once, or maybe a tax increase. We'll do an example of each of those, where maybe in our case, our Buckeye village income tax goes up, and so that's something that's going to apply to all of the employees that pay into that income tax. So first, let's take a look at our withholdings. Now, the way that we've been showing you how to do this, I think Steve Friendly has health insurance, so I'll go there. The one way to do this is perfectly legitimate way to do it, but it may be the longer way to do it if you have a lot of employees, is that you'll edit the withholding in the Edit Employee form, and you check mark that, click on Edit, and it brings up health insurance, and there's the $37.50 that is deducted from each of Steve's checks. Let's say that's going up to a rate of $40 per paycheck. So I could type in $40 here and save it. And there's a message about skip deductions, and I'm going to skip that message for now and just save it and close. And we can see that his deduction is increased to $40. Now that's perfectly fine to update it that way. It works. However, if you have 10, 20, 50 employees that all are changing are all on this, maybe the same schedule and same rate, that's a lot of steps to take for every single employee. So we've added a relatively new feature in UN, a shortcut, what we call the withholding area, or editor, withholding editor, that allows you to change that for all the employees with the same rate or the same dollar amount deduction for your withholdings, all in one step. So let's go there. That's under Payroll Maintenance Withholding Editor. And in the Withholding Editor screen, you can click on the drop-down menu and click any of your withholdings. I'll choose health insurance, and I'll make this full screen so we can see it more clearly. And notice, so it's going to list all of my withholdings that have all of my, employees that have the health insurance withholding in their custom list. And it won't show employees that you have not. You've got to add these. If you have a newer employee or an employee that's just qualifying for this deduction, then you'd have to go to their employee setup, their individual ID setup, and add that in this case insurance withholding first before they're going to show up on this list. So you can't add the withholding here, but you can make changes to existing withholdings that are already on the employee's setup. All right, so at the top here we've got under Edit By, we've got Edit By Group or Edit By Individual, and the list changes in format a little bit when you choose one or the other. So I'm going to start by editing by group. And notice the value for each of these employees. A few of them are a little bit different. Now, a nice thing about columns in UAN that you may not know is that you can sort by columns by clicking on the column heading. So if I click on value, the dollar value here, notice I'm clicking this and it's sorting by the number. And so that's kind of nice in this circumstance, because you'll want to change each rate, for instance, to $37.50, and our policy is going up to $40 for all of those employees. So I'll just select those two in the list, and I could use my little shortcut, press Control Up, or Control U, I should say, on the keyboard. That'll select all in between the two selections. So now I've got all the 3750s selected. I want to change those to 40. I go down to the Change To section, select Amount, and type in the $40, and then press the Save button. The wheels crank a little bit, and now voila, all of those are changed to $40. Saves you a lot of time, especially if you got a bunch of employees. Now for these, I've only got a few left. I could use the other option, Edit by Individual Employee, and sort those again. And so here I could go in and, I'm just going to make up a few amounts here. I can edit that individually. So that's 250. Okay, so I've made all my changes there and save. And that's all there is to it. So I'll click on Close. Alright, so that's the withholding editor for editing or for updating employees' amounts or rates at once. Well, I forgot to do the rate example. So let's open that again, and we'll just use Buckeye Village income tax for that example. And so that is going up. The tax has increased to 1.25%. And so I'm just going to choose by group and choose rate. Just type and select all. Okay, select all my employees and choose rate, and then type in the new percentage. And again, updates them all at once. sweet little utility for those circumstances. I'm going to change it all, large groups of employees at once. All right, so back to our agenda. How to give an employee an hourly increase? Well, it's actually quite easy. So we'll go to payroll maintenance, employees again. Now this is something that you need to update one employee at a time. So we're going to just say that Steve Friendly is getting a raise, $15 to $16 an hour. So we're going to edit Steve's information. And we'll go to his earning. All right, well, now I want to show you something about Steve. He's got a lot of benefits. He's got overtime when he works overtime. He does have non-cash. It's not relevant to this. It does not. He has leave and several leave benefits he qualifies for. Notice that his pay rate is all the same. These are dictated by our policy. Your policy could be different. Who knows? You know, especially police and firemen have all kinds of different policies. You could have, if you have leave, potentially when an employee gets paid out for leave, they might be, I mean, not paid out, but they use leave, they might get paid a different rate than they're earning. Potentially, when they get overtime, here this is the base rate times 1.5, but there could be different circumstances. Well, why am I pointing this out? Well, we'll show you in just a moment. Now this employee is his one earning at $15 an hour. Potentially he could have two earnings. Maybe one of them's a different position that he gets paid $10 an hour for. So I'll show you why this is relevant in a moment. So we're going to edit that earning. Open up the earnings screen, and I'll just kind of put his leave in view. We can see his leave and his overtime in these screens here. All right, I'm going to go to his pay rate, and this is where I would increase his pay rate. So I want to make sure that I paid his last check at the old rate, $15 an hour, and now he gets the raise on his next payroll. So we're going to type in $16 an hour, get a dollar raise, and click Save. And we get this nice friendly little message that says you have changed the pay rate for the employee earning. The prior was 15, the new is 16. And a question: should UAN automatically change all of the other items that have the prior rate to the new rate for the employee? So that includes the overtime, the paid leaves, and if the employee had any other earnings. Now, in some cases, it's a yes or no question. In some cases, you want to say no. If Steve Friendly, again, had a different position, a different earning, where he got paid a lot less, let's say $10 an hour. If you were to say yes to this, it would update his everything, including that $10 an hour position, to $16 an hour. If you just kind of click away here and you don't notice that, you know, you could potentially end up overpaying Steve Friendly and your employees, and you don't want to do that. So be careful with the message. It's a great, convenience for those who have a lot of these benefits or earnings with the same rate, but separate earnings for different reasons. So in our case, everything is consistent. He gets paid the same rate. We do want to update everything to $16 an hour. So we're going to say yes. It gives us a little confirmation message. And voila, there's our pay rate for all our leave, $16 an hour. The calculated overtime pay has increased based on the new base, $16 an hour. And again, that's all there is to it. Very easy. Repeat that for each employee that got a raise. All right, next on our the final item on our agenda is how to record a retirement leave payout that OPRS has deemed non-pensionable. And now this could also apply to just a leave payout for ongoing employees. Some of there's not a UAM policy for this. You have your township, your village, your library or district policies for employees that get leave benefits. And those are going to vary depending on your government. If you're not sure of that, you need to check on your policies, you check your legislation, and go from there, start from there. But what I'm saying is, for instance, in our sample, our fake township, our fake policy for employees is that if they retire, they can have up to, let me go ahead and close out of this, they can have cash out their sick leave up to 80 hours of their sick leave and 100% of their vacation leave balance, whatever it is. So that's our particular policy at our fake township. Yours could be different. You could also have policies where potentially where employees at a certain time in the year they could cash out sick or vacation or whatever type of leave. They could maybe cash out a portion of that. It's like some have an option annually to cash out their sick leave or vacation. So, and they're not retiring. They're just going to. It's just something that they could continue to accumulate leave or get cash instead of leave, instead of taking the week off or whatever. All right. So the question becomes: when I pay that employee's leave payout, should retirement be taken out? Because retirement, like state retirement, that is, OPRS or Ohio Police and Fire. UAN cannot answer that question. Whenever you do that, you need to contact OPRS or OPNF and find out if that leave payout is pensionable or not. If it is not pensionable, then you want to follow these directions. And in the booklet, we've got this. This is explained in our booklet, and so if you turn to page 5 and 6 of the booklet, you can reference this. Now we're going to assume in our example, our example is our cemetery sexton. It's buried deceased, and he's retiring. So we wish him well, and in our example, we've paid him his final wages, okay, for the hours that he's worked. But he has a leave balance. If I look at reports, we'll go leave reports. I'm a little bit hesitant because I could have some adjustments out here to get the background information, but we'll take a quick look at his leave detail. If I just scroll down to the bottom here, I can see, let's zoom in a bit, go to our second page. We've got some activity. He's accrued, earned, used some leave, but the bottom line is after his final check, he has a balance. Let's see, this is for vacation leave, for instance, of 128, rigged for class. I didn't plan on showing this report. But he has a balance of 128.70 for vacation leave. And he can cash out that full amount, get cash instead of using that. And then he's got a certain amount for sick leave. So leave reports will show you the activity. There's 3 different types of leave reports and the balances. So step 1, if you look on page 5, is to adjust the leave balances. Now you may be wondering, well, why do I have to adjust the leave balances? Normally when I pay leave, it automatically reduces the leave balance. That is true, but that's only for when you pay for, let's take a look at Barry here first and his setup. So I look at, for instance, vacation leave. Barry accrues 3.10 hours per biweekly paycheck, and he's got a balance of 128. If I were to pay this on his wages, if he took a week off before he retired, it would reduce this 128 by 40 hours automatically when he got paid for that 40 hours that he went to Florida and went on vacation. He wasn't working, but that week he got paid for those 40 hours. When I posted that check and paid his leave, it would reduce it automatically. That's what I'm referring to. For this payout, though, it's not going to reduce his leave automatically because of the way that we're going to set it up. So after he's got paid his final wage for the hours that he's worked, we want to reduce the balance before we pay him for the hours he's not working. We're just giving him cash in place of those earnings. So we're going to go to Payroll Utilities and do a leave balance adjustment. We get a message whenever we click on that saying, make sure you document this, because when you do a leave balance adjustment, it's just like cash. You're either giving the employee more cash in the form of a leave benefit or taking it away. So that's why auditors always look at the leave adjustments to and closely scrutinize those. So that's fine. We can document that. We have good reason for doing this. So we'll select Barry's name, the employee, and we'll just date this today. You can backdate adjustment to date perhaps then he retired. We're going to put in the purpose. This is for reducing for retirement and leave payout. The reason I said retirement and leave payout is because he's not getting, for sick leave at least, he's not going to get the entire amount. So we're going to reduce it. This shows his current balance for sick leave, $121.45. He didn't use, our particular policy dictates that he can only cash out 80 of those hours. So he's not going to actually get paid for the 121, the full balance that he has. So, but we do need to reduce that. And until you reduce this, even if you deactivate this employee later, it's still going to show that you have an employee in the system on reports. It'll still show that you're holding this balance for this employee of whatever it is. So it's very important that when an employee retires that you do this adjustment, or if they get an annual payout and it's non-pensionable, that you reduce the leave in this manner. No pensionable or non-pensionable. So we'll put in a minus sign, 121.45 to reduce it to 0, and then for his vacation, which he will get paid in full, 128.70. Oops, forgot to put the minus sign, so it just increased his leave. All right, so now our revised balance is 0. That's what we want, and we'll post it. And that's it. So if we were to print that report again, we would see that Barry now has 0 balance. The reason we're doing this before we pay, we're doing it ideally, I think. You could kind of work it out, but I think it's cleanest for a retiree that since he's retiring, you pay 2 checks, one for his final. I mean, you could have policy that dictate that it has to be all in one check, so it's not absolute. But if there's nothing requiring you to pay it all on one check, you pay his final, pay for the hours he's worked, do the leave balance adjustment. In the following steps, I'll show you how to set it up so that you pay his retirement, or his leave payout, his final leave payout. And then when you do that on the stub, it'll show that he has a balance of 0 on the pay stub. And so that's why it's important to do that before you print that retirement payout check. I'm sorry, leave payout check. I keep saying the wrong term there. All right. So we've reduced his leave balance. Now we're going to go back to payroll maintenance, and I'll show you how to set up this for a leave payout. We'll go to buried deceased, edit, advance, and choose earnings. What we want to do is actually, we're not going to do anything with his leaves here, his leave items listed here. We're going to go to the earnings tab. If you look on step number 2, we're going to add a vacation leave and a sick leave non-pensionable earning. I'll explain this as we go. I'm going to skip to the earnings drop-down menu here, and notice that our township already has a vacation payout we named non-pensionable. If I select that, it says the type is 9,000. It's a non-retirement item. Now notice when I select that type, if I look at the withholdings tab, it shows my employees' withholdings, but notice that OPERS is not listed. If I look at his hourly wages, OPERS would be listed. So by selecting non-retirement, this is specifically set up so that you cannot deduct any state retirement, OPERS or Ohio Police and Fire. And it will not record the payment as an earnable salary that would show up on, maybe that's the wrong term, but a salary amount that would show up on the OPERS OPERS contribution report. So it takes it off the OPERS contributions report, the amount that he's getting paid, as something that should be reported on there as pensionable or OPNF, and prevents you from even deducting that retirement. A mistake that some people make is that they'll just pay him out of the hourly wage earning, and on the wage they'll go and just zero out OPERS. And that causes problems because the software is programmed to look at that wage. Even though you've zeroed it out, it's still something that the software will calculate as a salary that should show up, or an earning that should show up on the contributions report. And so your report will show, hey, this is how much you got paid for this month, but you didn't withhold enough, or at least OPERS would think you didn't withhold enough. So that's why we specifically set up the 9,000 type earnings to handle that on reports and to prevent you from accidentally deducting retirement when it's not meant to be deducted. Now notice here that I've got vacation payout, but I don't have a sick leave payout. Well, this is because we have an earnings master list. This is not, by default, you don't have a vacation payout. That's something that we'll just say a prior fiscal officer set up for employees that got paid vacation payout that was non-pensionable. But no one, policies changed, and no one to this point has got paid out sick leave. So we need to set that up before we can add the sick leave payout. So we're going to close out of Berry and follow, that's step number 2 on page 5. Or I should say, step 2 and 3 depending on the situation. So we're going to go to our master list of earnings and leave under payroll, maintenance, earnings and leave. Again, payroll, maintenance, earnings and leave. And if you look at our list, there are some preset earnings and leaves here that preset, they come with the system with UAN out of the box, but others are customized, okay? Like for instance, bereavement leave. That's not not everyone has bereavement leave. That's something that the fiscal officer added. Let's see, and then our vacation non-pensionable. Now notice the type numbers. These are meaningful in the background for how these earnings or leave are handled. And like I said, the 9,000 is always 9,000 through 9,333 is always going to be a non-retirement item. Your system comes with one default, the 9,000, and apparently our fiscal officer made edits to the name of that non-retirement earning and called it the vacation payout. We want to leave that. We want to use that for vacation payout, but we want to add the sick leave and in the 9,000 series. So I'm going to name this something similar. Sick payout can't type, can I? Non-pensionable. And then I pick the type from the drop-down menu. And so we can see here the 9001 is the next one in the non-retirement series. There's the range. I have a whole lot of them, I suppose. And if you have employees that qualify for this that are OP&F members, then you would pick an OP&F type. That would be important for their OP&F reports, for their reports to work. In our case, we're going to leave that blank. This only applies to some of our OPRS members. And we'll save that and close. So now we've got our sick non-pensionable, and I'll excuse me. I'll close our master list of earnings and leave, and we'll go back to payroll maintenance employees and go back to our employee and edit. Go to his earnings, and we'll add that sick leave now. Now for your earning, you're going to put in the same position information that you normally have for your particular employee. So he's a cemetery sexton, so we'll fill out that information. That's right, yep. So, oops. I'm just going to do this for sick leave in the interest of time, and you would, since he's been sick and vacation, you would do it for both normally. You would add this. So we'll pick the sick payout, and he's a biweekly paid employee. Now notice the pay rate. This is important, not so much for Barry here because he's retiring, but for employees that when you have a policy where they can maybe annually cash out their leave benefits or a portion of their leave benefits. What I highly recommend is that you set the pay rate for this non-retirement item at 0 and edit that at the wage. So you put in the amount that you're paying at the wage. So it always comes in as a 0 rate. That way you avoid accidentally overpaying the employee. If on the next payroll you forget to change it back from $1,000, now you've just posted a check, and hopefully you catch that before you hand out the checks, but even then you're just wasting a warrant if you do that. So set it. I'd highly recommend setting this at 0, and you can edit that later when you're doing the wages. Notice it doesn't give you an option for overtime or leave. This is specific to, that wouldn't be applicable to a non-retirement type item. You do have the withholdings in the accounts tab. So we'll click on accounts first, and let's see, he's in cemetery, so I'll pick a cemetery code for our sample. And then I'll go to withholdings, and this is also an important point too. In my situation, I've already paid him his final regular earning. I've already taken out his health insurance and dental insurance, and you can see his health insurance family plan here is a good chunk of money there, $250. If I take that out again, I'm over withholding and underpaying the employee. I don't owe that amount. It's a second check, and I've already taken out that for that payroll. So I want to be careful here. I only want to select for these types the taxes that should be taken out of, and the miscellaneous type ones or deferred comp or these type of things. Don't place the check mark there, because remember that when you select these, it's telling the software to deduct this from their check whenever you pay this earning, and we don't want to over withhold for those. So we'll go ahead and save this and close, and now we've got the sick payout for non-pensionable listed there. Again, we'll skip the vacation for class purposes, but you would add that as well since he has that benefit. Now I'll show you briefly how this looks on a wage. So we'll select wages and then add a warrant. Oops. Oh. I'll just select, I think he's bi-weekly. Advance my date. Let's see. There, he's right at the top. Now, notice that since I've already paid his hourly wages, I don't need to select that. I can just select the sick payout for non-pensionable. So that is an option whenever you're adding wages if you have multiple earnings to select just one of them. So I'm going to select that and we'll edit. And so there it is, just by itself. Remember I set the rate to 0. This acts similar to an earning, and if you're familiar with the per item earning, where you, like for zoning, in one example of per item earnings, when you turn in zoning permits, you don't get paid by the hour for it, but it's how the set amount for the permits you turn in. So it's whenever. So that's why we have this column labeled hours items. And in this case, it's referring to it's just one. And so it'd be run times the total rate. Remember, we're paying out the sick leave, so he's not working any extra hours here. He's being paid cash instead of taking that time off. So we don't want to put in the hours here. We just leave it at 1, and we'll just say he's getting paid $2,000. Make a nice even number. And again, if we were to look at our withholding to see Medicare is not, Medicare is listed. OPERS, his retirement is not listed because it's a non-pensionable item. Save that, and you can go post it. You're good to go. Now I'll show you what this looks like if, for instance, this employee is continuing. This is just an annual option to buy out sick leave. Then you could include it in one of his checks. Oh, I gotta select more here. So if this were ongoing, I could still post a separate check for the sick payout, but I do have the option of including it with his regular wage if this is an ongoing employee again. It's just claiming some of his option to cash out. And if I edit that, it's going to look different. It will show OPERS because the OPERS will be deducted from his regular hourly wages. But I can also add in that sick payout. Like I said, that was what, 2,000. And that will calculate the other withholding taxes in addition without including those wages in his OPERS amount or deductions. Okay. And it will also, this employee accrues sick leave and vacation. It's going to continue to accrue it. So for ongoing employees, you would you just leave that as is if he's still accruing that sick leave and pay leave. Vacation leave. All right, so let's look at our agenda again. We've completed all of our goals for the agenda today. I do have one point of clarification that I would like to finish with, though. We did look at an example of an employee in which we added another account code, but that was a very simple employee setup. Remember, that was John Smith. Where is he? He just had one earning at the time, one account code, with no split, and then we also added the object split. But he had no overtimes and no leaves. And you may have some employee with some other benefits, and I'm going to see how adding an account code can impact them. We'll look at a couple of quick examples here. We'll go back to Carl Crank and take a look at his setup. He had those two account codes for his earning. He's got the same account codes for overtime benefits, and he's got the same account codes for any of the leave benefits that he gets paid. So, and he's got the object split for his withholding share, matching shares. So what happens if we need to add an account code or change an account code for Carl? Well, if we go to his earning and make an edit there. Now he's got the hourly split, so keep that in mind. That is for not used as often, I don't think, for hourly employees, because typically an hourly employee their hours will vary so much that they wouldn't have typical hours charges to accounts when you have multiple account codes used. But you could, and in Carl's case, his 2-week hours are very predictable. Most of the time, 60 hours charged to gas tax, and most of the time, the other 20 hours almost always works, 40 hours a week, so the other 20 hours charged to the park. But let's say, just like with John Smith, that he occasionally we would charge the general fund. Okay, so we could add that to his account list here. And again, since it's occasional, even though he's got the hour split method, we can still leave that as 80 hours 60/20 distribution. And when we pull this into his when we go to pay his wages, it's going to automatically fill in this this exact distribution of 20/60, and leave this one, the general fund, at 0. And let's say 24 out of 26 pay periods a year, that's exactly what it should be, but just on those 2 pay periods, occasionally it would change. You wouldn't change it here. This is just the default. You would add the amount, the hours, and edit the hours like we saw with John when you're doing the wages. So this is a nice way. If there are potentially 3 different account codes like this, I don't imagine that, but I guess there could be, then you could add all of them and leave them at 0. With the manual split method, everything's set to 0, but hours or percent, you have to put in an amount and at least something for one of the account codes. So, but you can add additional ones that you might use or occasionally use and just leave them set to 0. All right, that's one point with an employee like this. There's a few other things we're going to look at. So there's the 3 potential account codes you could use on his earnings. What I want to point out is that, yes, with withholding object split, just like we saw with John, the account distribution will follow. So now we see the general fund is listed in addition to the gas and park, where it wasn't before. So an object split is great for that, for withholdings. However, with his overtime benefit, no such thing. It does not automatically when you have a change to the earning, it does not automatically change the account distribution for the overtime, any overtime benefit, or for any leave benefit. So you see that remains the same. Nor should it change that account distribution. The reason UN does not program it to automatically change the account distribution is because your policies will dictate whether that should be changed or not. UN cannot predict what your policies are in that area, and so the software leaves it. You will have to make edits to that. So I wanted to make sure I pointed that out with an example where they had these benefits. So if I wanted to add the general fund as a possibility for overtime, then I could add it right here in the overtime, edit overtime subform. Or for leaves, again, I could add that to each of these leave account distributions if I wanted to add the general fund. Now I'm not going to do that for our township. Our policies are okay for never charging, in Carl's case, even if he works a few hours at that's charged the general fund, we're fine at our township for just charging what the normal accounts that get charged when he gets his regular pay, typically these two funds. So that's going to be dictated by policy. So we're going to leave. So in our case, we're going to leave it off. So that's one example. Another similar example, Steve Friendly. He has an account distribution of 4 different account codes, and that is almost the exact opposite. For overtime, he could charge the general fund, but for his leave benefits, it always charges. We will always pay out of one of these funds, one of the 3 funds here. If conversely, if you make a change here, so if we go to Steve's and we say, well, we want this to be more consistent, like with Carl, where if he gets paid overtime, there's, it rarely works in our policy, so that's okay. When gets paid overtime, this is where he'll get charged. We could remove that and save it. And again, it's not going to change his account distribution in the earning, just because the overtime is assigned to or attached to that earning. So vice versa, works the same both ways. All right, so that's all I was going to cover today. Thank you for your time. You may now turn off the video.